Oh, good morning, good morning. You see, I had to put the shade down because today the sun is coming up and it's glaring through the window. It is Wednesday, January 12th, 2022. I am Kenny Polcari, your host of the party. And what is happening? The last 2 days, it was all about Jay Powell. It was all about, his renomination, what he was going to say to the Senate. But today and tomorrow, it's going to be all about inflation, right? It's going to be all about whether or not it's hotter. So what is it that we need to know? What is it that people should be thinking about? So like I said, Jay Powell managed to play on both sides of the fence yesterday in his renomination hearing. Algos and traders took his comments as dovish. Stocks rallied. Although I think the dovish part of that is a mistake, but it is what it is. CPI is due out today, T-minus 1 hour. PPI is due out tomorrow. Those are going to be two key factors that everybody is going to be watching. The dollar index is breaking lower. And what are we having for dinner? We're going to try the shrimp scampi with Vidalia onions, chopped broccolini, and a splash of white wine. So good, so easy to make. We'll get to that in a minute. So again, yesterday, like I said, it was all about how Jay Powell performed on Capitol Hill and if he's going to reveal anything new concerning monetary policy, right? So as he appeared on Capitol Hill for his renomination hearing, Jay made it clear that the market does not want any more stimulus, that the economy is healthy and is in need for tighter monetary policy, which means higher rates and a smaller balance sheet, and that the Fed was prepared to deliver it. He's also fairly confident that the supply chain bottlenecks are going to ease, helping to reduce the threat of ongoing inflation. Yet he didn't back away from saying that if inflation remained a problem, the Fed would do whatever is necessary to contain inflation and prolong the expansion. It reminds me of the Mario Draghi ECB comment during the crisis that they would do whatever it takes. What he did not do, though, was offer up any specificity on the future path to monetary policy. So, for instance, he didn't commit to raising rates on any specific date, which doesn't mean it's not happening. But the algos assume that maybe it's not the schedule that analysts suggest. And that schedule is March, July, and September. And if you toss in Goldman, they add December for 4 hikes next year. And so stocks went from negative to positive as they tried to spin it as more dovish, which I think is very short-sighted. But look, everyone's got to make their own decisions, right? You position yourself to take advantage of how you think this is going to all play out. Now look, no talk of any specifics surrounding the balance sheet reduction either, other than to say it could happen later this year and it's just another tool for the Fed to tighten, a topic that's become the latest flash in the pan. In the end, though, I think he was deliberately vague to try and let it all settle down, right? To stop stocks from sliding lower, to get people to take a breath while allowing investors and traders and algos to digest all the latest information that has presented itself over the past week. His remarks on interest rates purposely guarded ahead of the January 25th, 26th Federal Open Market Committee meeting, the FOMC meeting, right? But what was interesting is what he did say. And he did say that if we have to raise interest rates more over time, we will. And that over the course of this year, we will move towards a policy closer to normal. But it's a long road to normal from where we are, which suggests that while rates will move higher in historic terms, rates are still quite low. And remember, there's a whole generation of people in this industry that know nothing but zero interest rates. So anything above zero to them is high, right? Some of us know 15 and 16% interest rates, but that's a whole other story. He also offered up some clues on inflation that seemed to contradict his other comments, saying that in order to get a strong labor market, we need to have a long expansion. And in order to get a long expansion, we need to have price stability. And since high inflation is a threat to price stability, the implication is that the Fed is fully prepared to go all in on raising rates to nip it in the bud. So here's how I see it. I think here's how it's going to play out. 3 times is now a given. Whatever months you want to say, 3 times is a given. 4 is becoming the expectation. They're trying to get everyone ready for 4. 5 or more times is going to be like light your hair on fire, sending yield soaring and stocks plunging, right? And I think that's going to happen. I think yields are going to go higher, stocks will move lower, but they won't plunge. A place I don't believe he really wants to be, but where he might find himself no matter what. The jury is still out on this, and we're only going to know what's going to happen as winter turns to spring and spring turns to summer and we get more economic macro data. I think we're behind the 8 ball, but versus being in front of it, but let's see. The smart money is still betting that the first increase comes in March, and we're going to get more clarity on that on the 26th. Remember, there's no February FOMC meeting, which doesn't mean that they can't do something if they need to. It just means that after this meeting, the next formal meeting is in March, right, in the spring. Recall that February and July are Humphrey Hawkins months. That's when the Fed marches up to Capitol Hill for a 2-day summit to address the House Financial Services Committee and the Senate Finance Committee and answer questions that most of those elected officials don't even understand themselves. Look, but that's a whole nother story, and I digress, so we should just get back to the markets, right? At the end of the day yesterday, the Dow added 183 points or 0.5%. The S&P's up 42 or 0.9%. The Nasdaq gained 210 points or 1.5%. And nobody should be surprised at all by that move. And the Russell gained 22 points or 1%, while the transports actually ended negative, giving back 28 points, down 0.2%. Today, like I said, is all about the CPI, the Consumer Price Index, and the expectation for it is to be hot. Up 0.4% month over month, up 0.5% if you take out food and energy, while year over year the reports are calling for 7% and 5.4% respectively. If the number is even hotter than what we expect, then look for the talking heads to confirm a swifter taper, a swifter balance sheet reduction, and a swifter move to raise rates. And don't be surprised that the conversation becomes a 50 basis point move in rates versus the expected 25. Remember, I'm in the camp that we're going to see a 50 basis points move at some point this year. And if we do, then that's going to count as 2 rate moves. Because remember, everyone else is talking about 25 basis point moves. So if we get a 50 basis point move, that's like we move twice in one move. Now, if the report is surprisingly weaker, which is unlikely, but anything is possible, then it's going to take some of the pressure off those swift moves and maybe push them back a month or two, or maybe not, because we're going to have to wait for tomorrow's PPI report, right? The Producer Price Index, which is expected to be kissing 10%, a rate that we haven't seen since the late 1970s when I was just a puppy. The 10-year Treasury yield ended the day at 1.74%, and this morning it's anchored there as well as we await the 8:30 CPI report. Again, a stronger report is going to we'll see that yield shoot higher. Oil up 4% or $3.10 yesterday. The end of day, 81.33 a barrel, and this morning it's up another 50 cents, trading at 81.80-ish. Do I need to say much more? The XLE up 13% year to date. ExxonMobil up 19%. Chevron up 9%. EOG up 15%. Schlumberger up 23%. COP up 16%. PXD up 12%. And this is just from January 1st. That's only 8 days ago. Again, think the value trade for 2022. And there's other names in the value trade, financials and consumer staples. Crypto's also trying to find stability as the markets come down a bit. The cryptos are following suit. This morning we're seeing Bitcoin trade at 43,000. That's up from 39,500 on Monday, while Ethereum is trading at 3,200, up from 2,900. If, as investors hope, Powell remains on the dovish side of the fence, then we could see financial assets churn maybe and move a little bit higher. I'm not in that camp for now. I think there's going to be more turbulence. He is a hawk now, dressed in dove's clothing, I think. I think he has to be, right? I think he's trying to keep it calm, but I think really it's going to become more hawkish. Gold, which has been hugging the $1,800 line, shot higher on Tuesday, ending the day at $1,821. On the back of Powell's comments around inflation. Remember, I pointed this out and said that it had been hugging all 3 of his converging trend lines right at $1,800 an ounce, but it could test the November highs of $1,870 if the inflation story continues to heat up, while a failure to hold could see it plummet to the $1,750 range, really before it found significant support. My sense is, though, that the move up is suggesting that the gold market is assuming the inflation story is not going away anytime soon. The dollar index, the DXY, which had been stuck in this sideways trading pattern for 3 months, was sitting right on its trend line at 95.87. It failed to hold and is now trading below that support level at 95.60. It's kind of in this funny place. The real next level of firm support is at 94.67. A move down is going to send commodities higher: gold, oil, lumber, soybeans, coffee, steel, etc. And that is going to continue to play into the inflation story. Gabish? Okay, this morning U.S. futures are up. Dow futures up 50, S&P's up 6, Nasdaq up 40, and the Russell is up 1. Today, like I said, is all about the CPI report and then all of the interpretations that everyone's going to give it. If the report is weaker, which would be a good thing, but hard to imagine how it could be true, it's going to be interesting to see how they spin it. The chatter will go from today's CPI to tomorrow's PPI, so sit tight. Don't go anywhere yet. Don't leave your seats, because for the next 2 days, it's all about the inflation story. It's a good thing that earnings are going to start on Friday, because that's going to then redirect the conversation at least for the next 3 weeks and maybe take some of the pressure off. European stocks are up this morning as investors there await the latest U.S. Inflation data and any hints of clarity surrounding the drama that was created over the last couple of days. At 7 a.m. this morning, the markets across the region in Europe were all up between 0.25% The S&P closed last night at 47.13, up nearly 1%. If the smart money is correct, the CPI will come right in line, leaving investors to speculate about whether or not we've hit the top. We ended on the north side of the trend line and needs 46.78 to hold if we test lower this morning. If the CPI is hotter, then I would expect yields to move up and stocks to come down. But I guess what happens is going to depend on how they spin it. In the end, keep your eyes on the 10-year yield, right? That will give you some sense and a hint of where they think it's going. And clearly, I think it's going higher, but it is what it is. Remember, you can text the word invest to 21,000 on your cell phone to get my digital business card. Feel free to download it. It goes right into your contacts. You can send me off an email or a text. I'm always happy to engage, talk to markets, planning, thoughts, concerns, ideas, anything that's on your mind. You can follow me on Twitter and TikTok at Kenny Polcari, and you can get me on Instagram at Kenny P 1961. Okay, so what do we have for dinner? Now, this is kind of a play on shrimp scampi, right? This one's got Vidalia onions. It's got chopped broccolini. We add a little bit of white wine in there just for adding white wine in there. I add white wine anyway every time I make shrimp scampi, so for me it's not necessarily anything new. But when we have this is just a different spin because it's got this chopped broccolini and it's got these chopped onions in there, which make it really great. So for this you need a pound of the large, clean, deveined shrimp. You need butter, olive oil, garlic, lemon, white wine, clam broth, chopped broccolini, diced Vidalia onions, salt and pepper, and you need a pound of linguine. You want to bring a pot of salted water to a rolling boil, put it on the back burner so that when you need it, it's ready to go. You don't have to wait for the water to boil. Now, in a big saute pan, that's going to be enough to accommodate the pasta, you want to melt some butter, add a splash of olive oil so the butter doesn't burn, and add in the crushed sliced garlic. And make sure you add a lot because this dish loves garlic. You want to saute it around, keep the heat on medium high so you don't really burn it. Now add the onion and the chopped broccolini. Saute that around in the pan for 5 to 10 minutes. You want it to kind of get soft. You want the broccolini to get a little bit soft, not mushy, but just a little bit soft. Now you're going to add the pasta to the pasta water. You're going to cook that till it's al dente, about 8 minutes, but test it. Taste a piece every once in a while. Make sure that it's properly salted and that it's properly cooked. Now you're going to add the shrimps to the saute pan while the pasta's cooking. Let them turn pink, then flip them over to the other side. Let them turn pink. Now add the juice of 1 lemon, add a 1/4 cup of white wine and a 1/4 cup of clam juice. Just have a glass of wine for you on the side. Turn the heat up to high and let it reduce by half. Strain the pasta, reserving a mug full of water. Add the pasta to the saute pan, mix it and serve. Now you might need to add a little bit of the pasta water to keep it moist as the pasta does suck up all the juice, right? So mix it, serve it, just make sure it's a little bit moist. You don't want it wet and soupy, but you want it moist. Take a handful of grated Parmigiano cheese, which you can never go wrong. Although, you'll get some Italians that tell you you can never put grated cheese on fish. I disagree with that. You could throw in a handful of grated Parmigiano cheese while it's in the saute pan, mix it up so that it's coated well. And like I said, if you need to add a little of the pasta water, feel free to do it, but don't make it too soupy. Serve it immediately in warm bowls. This will go great with some toasted Italian garlic bread, if you want to have that on the side, and obviously a nice glass of white wine, if that's what you prefer. You know me, the one I used to cook with and the one I used to drink is Pinot Grigio Santa Margherita, because I think that's a great wine. All right, I love the flavor. I love the way it works in cooking. I am not a big Chardonnay fan, so I would not use Chardonnay, but that's your call. In any event, look, the sun is still shining through this thing, so my face is all shiny here with the sun. So take good care. Watch the CPI today. Tomorrow's the PPI, and I'll see you in the morning.